Good afternoon, viewers, and today once again I'm here with one to discuss one question. This is on question to classify the fixed cost and the variable cost using one simple method, high-low method. So let's go through the question. The following information for advertising and sales has been established over the past 6 months. See, they have given you the months, month 1, 2, 3, 4, 5, 6. They have given you 6 months, and they have given you sales revenue and advertising. What is important here, first of all, to identify what is independent variable and what is dependent variable. What will vary because based on what the variable, the fluctuation or changes of the another variable. So here they have given you the sales revenue, and then they have given you the advertising expenditure. So the sales will vary based on the advertising expenditure. So this is independent variable. When independent variable, we classify that as X, and the dependent variable we classify that as Y. Now the most important factor here to find out the that fixed component, variable component, and the fixed variable overhead component or variable cost component, and the fixed cost. In doing that, we have something called high-low method. We have something called high-low method. In this, what you do is you choose the highest advertising expenditure and then choose the sales revenue against that, and also choose the lowest advertising expenditure and choose the sales revenue against that. The lowest advertising expenditure here is this 2.5, and against that the sales revenue is 125, and on the other hand the highest advertising expenditure is 6.5 and the sales revenue is 225. So let's record that. So I have advertising expenditure 2.5, and this is advertising expenditure, and here sales revenue, and the sales revenue for that is 125. On the other hand, the advertising expenditure is 6.5, your sales revenue reaches to 225. So following high-low method, what we really do is that we get the difference. We find out the difference. We subtract. If I just number it, this is equation number 1 and this is situation number 2. I subtract situation number 1 from situation number 2. When I do that, my answer here is 4, and then when I do that, my answer is 100. So for the increase of 4 unit in advertising expenditure, sales revenue increases by 100. So increase of 1 unit, the sales revenue will increase by 25. So the variable component related to the sales revenue is 25. Every time advertising expenditure will increase by $1, your sales revenue will increase by $25 if in this context. So accordingly, if I factor it out for the situation number 1, so if I assume the variable component that the advertising expenditure, the quantity is the advertising expenditure quantity, if I assume that is X, so 2.5x, and it also have a fixed component that is fixed component, my sales revenue will be 125. As we already calculated, now this is 25. So into 25 plus fixed component, which we don't know, 125. Yeah, so accordingly 2.5 into 25, I am getting 62.5 plus the fixed component, which is 125. Therefore, my fixed component will be 125 minus 62.5, which is 62.5. Now we can reconfirm this with the 6.5 scenario. So for 6.5 into 25 plus 62.5, let's see how much we are getting. Into 25 plus 62.5, I am ending up with 2.25. Now let's read the question. What the question they are asking? Using the high-low method, which of the following is the correct equation for linking advertising and the sales from the above data? So you see, our fixed component is 62.5 and the variable component is 6.5. Accordingly, so the answer here will be this. That's our answer. So with that, I conclude this discussion. Likewise, I will be uploading different discussion on questions. So tune on to my YouTube channel and subscribe, like it, and then also press the bell button. Thank you so much.